Good morning, everybody. It's Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comment for the 8th day of June, Monday. Well, it seems we're back in the upside down, right? Iran and Israel are shooting at each other, and crude oil is only up $1, trading at 91.86. The dollar's a little bit lower. That's probably the biggest surprise. And the stock market, which everybody was trying to call topping out on Friday because we had that pullback, it's found a little bit of support here and is higher. So, again, the big trends continue. In the grains, we are so oversold, it's absurd. But that doesn't mean that we can't get oversold more. There's that old expression, John Kenneth Galbraith, I think he said, the market can remain irrational longer than you can remain solvent. So, yeah, are we way oversold? Yeah. Is it the worst June performance since 1973? Yeah. I mean, but if you look at that chart that I sent out, long term, we're possibly, closing in on that big long-term support down there at around 385, 390. It's not a secret. It's not black magic. All it is an old trend line down there that sometimes these robots like to go get. So we'll have to wait and see if that happens. We have had big corrections in the grains. November beans basically gave back half of this entire year's rally. But if you look at the actual life of contract, this 1135 is a big level. Probably the downside risk from here is like 1111. Doesn't mean we can't go lower than that, but it does mean that we're way oversold and due for a crackback. Okay? So, how do you approach it? Roll down your puts. You don't want to have puts that are very expensive on the books right now. Take as much money off as you can. That's number one. Number two, do not lift your puts, right? Rolling down puts is not saying that the lows are in. It's saying we want to have very cheap protection. It's like if there was just a hurricane, right? And the hurricane insurance salesman comes through and says, hey, do you want to reload again and, have real expensive insurance on? No, because they're like, hey, I just got my check for the hurricane. Chances are we going to have another one? No, but hey, let's keep one on just in case, but something that's cheaper. Overnight, July corn down 2 cents at 4.15.5, traded as low as 4.12.5. December corn, 4.44.5. There you go, quadruple fours. The low is 4.41.5. Remember, we're underneath the January low at 4.45 from that USDA report, so we've fallen down to those old levels. November beans down 2.5 cents, 11.35. It did trade as low as 11.28 3/4. Spot beans traded 11.11. Trading at 11.18 right now, down 3 1/4. Take a look at Kansas City wheat. If you are a wheat producer, the low of the move here was a 62% retracement of the entire year's rally. We've caught a little bit of a bid here, and I'm not calling a low, but I'm again saying roll your puts down if you can do it, guys. Take the money off the table on your puts, because when and if we do explode higher, you want a very cheap put to go worthless. You don't want an expensive one to go worthless. You're long the grain, so you want the grain to go higher. You don't want your puts. You don't buy a put and root for it to pay off, right? You want the cash to go higher. You don't want to use your put. And then lastly, I'm going to say this. If you are interested, or if you're an end user, if you are someone that made cash sales, 70, 80 cents higher, if you were able to do that, absolutely positively look at re-owning cheap calls either through the end of July or go to September timeframe. The market's giving you a gift. Take advantage of it. What gift? Well, when the market collapses, puts get expensive and calls get cheap. So we're all about managing risk here. You have two piles of risk. You have your sold grain, right, which is already out the door, and you have your unpriced grain. Your unpriced grain needs a put because that protects the downside. Your sold grain, if you're interested in it, look at buying a call. Did we have calls on after we made cash sales back when we were at 487 in corn? Yeah, we did. Did we have calls on after we made cash sales when November beans were above $12? If guys did that, yeah, we did. We had calls on, but we only had 5 cents on corn calls and maybe 8 cents, 10 cents, 12 cents on bean calls. So even though the market collapsed, we didn't lose any more than our premium on those calls. So if you had re-owned futures, you'd have gotten hammered, right? All the way down. But if you re-owned with calls, the max loss was what you paid for them. And again, we kept it very, very cheap because I wanted to be in a position that if we had a move like this, we could reload. And I wasn't telling guys, throw another 25 cents at it. That's insane. But throw another 5, 10, 12 cents after a 50-cent break in corn and an 80-cent break in soybeans. Yeah, absolutely, positively. Is it a guarantee that those calls are going to work? No, I don't sell guarantees. Nobody does. Anybody that does is out of their mind. But if from a risk management standpoint, this is when you want to be looking at calls. And again, buy yourself some time. Go out and buy 2-3 months worth of time if you're interested in that type of hedge. In the cattle, a tremendous turnaround after Thursday's whipsaw with the New World screwworm. We've got a second case of it now in Texas, and long term, it's friendly for cattle. I am surprised that we didn't spend more than just 30 seconds at the 6-month low. We did break to a 6-month low in feeders, and now we've turned around and come up to a couple-week high. So a tremendous volatility. I would expect to continue to see that type of volatility in cattle. And the hogs are at a key turning point. Lower across the board. The hogs are the one contract that the funds have decided to get short in the protein complex. They're long fats and feeders. They're now short hogs. Hopefully they're selling it in the whole, and then we'll have to cover it. But for now, again, if you have hog puts on, roll them down, roll them down, roll them down. This is Chris. Have a good day. 312-638-8868.